Hello, everybody, and welcome to the live session today. Today is February 13, 2023. I just want to turn on the captions in the bottom part of the screen with a disclaimer. We are about to start our Before the Bell in 3D session where we review the markets on the Mondays before the US markets open, more or less 1 hour before, isn't it? And we basically prepare by doing some key analysis of 5 key markets out there, which are, to be specific, the S&P 500, crude oil, gold, the US dollar, as well as the bakkt Bitcoin, as you can see on your screen. Talking about what you see on your screen, you can access this information by utilizing our LinkedIn page with tradewithufos.com/3D newsletter. By the way, my name is Jose Blasco, which I haven't said, and you can also see my email on the screen. If you need anything from me, feel free to shoot a message in my way. Talking about the LinkedIn page that I am displaying right now with Before the Bell, I'm going to go over certain information which is critical to understand the market environment as the week begins. And also know that you could subscribe. This is a free newsletter on LinkedIn, so you can subscribe for free. And not only you can read it on LinkedIn, but if you prefer, you read it on your inbox as well, because an email will be sent to you every week. So let's begin our 3D approach. And the first market that we are going to analyze is the S&P 500. Of course, instead of looking at a static picture on the screen, I'm going to look at the real-time charts. Here we go. I am utilizing TradingView as a platform at this moment in time, and I have two pieces of technology running. One of them is what we call our auto UFOs. You can see those red UFOs, as well as you will see later some green UFOs as well. And I am also utilizing auto climate on the bottom part. These are two of the three dimensions that we're going to explore. Auto climate telling us what is the expected upcoming direction, which has to do with statistics. And right now, what we have here in the case of the S&P is a down climate. So if I go back to the document I was displaying earlier, we can see here climate is down. Now, notice how the dot that we have on the screen, while it's a red dot and therefore it's a down climate, let me zoom in. That particular dot happens to be thin, which compared to the other dots that you can see on the left, those were thick. So what does it mean when the dot is thin? It means that the climate is unconfirmed. When we are dealing with an unconfirmed climate, it means that we are at a stage where the probabilities are the least on our favor, meaning that, to be honest, anything could happen. Either up or down. There is not a clear statistical advantage in any direction. Little bit to the downside. That's why the dot is red, but not the greatest of all. So in the case of the S&P, if you are trading like we do, if you are using the daily time frame, which is the one I am displaying at the moment, so trading plans would involve a little bit of waiting action. Now, the second aspect of the analysis is what we call the UFOs, which is our patented technology UFO, which stands for on-field orders. And in this particular case, we can see on-field orders to sell at 42.58. On-field orders to buy are located lower at 34.80. So the S&P, to be honest, is a bit in the middle of nowhere. It's very difficult to predict right now what's going to happen. We may have a leg down, we may have a leg up. We will see that as the climate confirms in the following days and as new on-field orders show up on the screen, because auto UFOs is real time. So we may have red UFOs show up on the screen. We may have green UFOs show up on the screen at certain price points. And then we will know where are the right prices, or the efficient prices, I would say, the statistical prices. Maybe it's a better way to say it, where to buy and where to sell. With odds in our favor, even though, of course, this is trading, my friends. If you're new to trading, you need to know that no one can predict the future. Technology helps us with statistics, but we always protect ourselves with risk management and discipline and management of the emotions as well to do a good job in trading. So UFOs, dimension number 2, located at 42.58 when selling. UFOs located at 34.80 when buying. Those are very relevant key price points where turning points are expected there. This is the definition of on-field orders. On-field orders responsible for the oncoming turning points. And finally, the third dimension has to do with the speed of movement, the volatility. In this case, we are getting that information from options on S&P. And when we reverse engineer the options pricing models, so basically we would conclude that the expected move in a daily basis is going to be 52 to 53 points a day, either up or down. The expected move in a weekly basis, 116 points, either up or down. In a monthly basis, 242 points, either up or down. That's what we have with the S&P. And now I'm going to just, even though it's not like I did it too slow, but I'm going to move just a little bit slightly faster to analyze the rest of the markets now that you understand what I'm doing if you are new to watching our sessions. And the next market for us to analyze, it's going to be crude oil. And I'm loading crude oil here on a daily time frame. Obviously, different chart, different climate, different UFOs, different everything. Every market is unique, isn't it? And what is it that we have here? So we are dealing with a up climate, which is confirmed. Statistics suggest this climate could last for 7 candles. We are currently on candle number 4, so it's looking like crude oil will keep going up, and statistics suggest we should be reaching 84.06. That's what statistics suggest. Now, the moment we get to that red UFO, the unfilled orders would kick in, and then the expectation would be for the market to go lower, in this case crude oil, and when crude oil gets to 74.51, then we got buy unfilled orders, right? So we would then expect the unfilled orders to kick in and see another move to the upside in the case of crude oil. That is what we have in front of us. Very objective analysis based on intelligent technology, processing market data, which obviously computers can do that better than humans, and faster and better and real time, and throw on the screen the relevant UFOs, in this case the price points where buying and selling would make a lot of sense within those conditions. So market climate for crude oil confirmed to the upside. Sell unfilled orders located at 84.06, buy unfilled orders located at 78.84, and volatility, speed of movement, in the case of the daily time frame, we expect a little less than 2 points a day, weekly a little less than 4 points a week, monthly a little more than 8 points per month. That would be the expected move. Next market, we are now dealing with gold. So let's take a look at the real-time chart of gold. And when looking at gold, 1, 2, 3, loading gold, here we go, here are the UFOs. So when dealing with gold, we are dealing with a down climate, which is confirmed. And a statistical duration of a down climate in this case is 5.79, let's call it 6 candles. We are now dealing with candle number 7, which means that statistically speaking, this climate is now lasting a bit more than what is normal. Normal as defined as a 1 standard deviation. 60+% of the cases. So we are talking about a climate which is more likely going to change direction than not, and if it was to keep falling down, of course, the moment it gets to 1832.4, we got unfilled orders there, and the expectation would be a turning point in the gold markets. So now notice that we don't see a red UFO on the screen at this moment in time. That is why we got NA, okay? Climate is down. No sell unfilled orders at this moment in time. Again, Auto UFOs is a real-time tool, so at any moment we may have a red UFO plotted on the screen, but as we speak, real-time, it's not there. So no sell unfilled orders, meaning that if gold turns and starts going higher, we may have such a powerful leg to the upside because there is nothing to stop it. That's quite attractive. But of course, we cannot fall into greed or anything like that, and this is obviously not financial advice. We need to wait for the right rules of our trading plans to be met. If you trade like me, I will wait for the climate to change to blue, etc. And you would then plan on a safe trade with risk management, with stop orders, and whatever contingency plan you use, maybe use options, etc. So 1832.4 is where the unfilled orders to buy are. And then when it comes to identifying the speed of movement, that one is expected to be at a rate of 18 plus points a day, either up or down, 40 plus points a week, either up or down, and 80 plus points either up or down in a monthly basis. This is extracted from the implied volatility on options on gold futures. Next market to analyze is going to be our US dollar, probably one of the most relevant markets in the world. 80% of transactions are done in US dollars, not only in the financial markets, even physical markets of all sorts. So this is such an important currency. It was definitely the boss last year, and will likely remain as the leading market in many ways. So now notice that here we are talking about a little bit of a slightly different picture if you compare my real-time picture with the dollar index versus what we have on the news flash. Notice a few hours ago the technology was identifying buy on fill orders on the chart, which were plotted when the screenshot was taken, this is in the context of an up climate. Okay, so I guess that earlier in the day it made sense to buy a dollar. Now notice that as we speak, while the dollar has been moving higher during the trading session, and some money could have been made. Maybe you are trading intraday, isn't it? Everybody probably attending this session may have different trading styles. So while some money could have been made and some trades could be planned, and again, with dollar, we have a very similar picture compared to gold, which is no red UFOs. So if it starts going higher, we may see the dollar just go back up very, very high, which may imply, by the way, very aggressive movements to the downside on, let's say, equities, for example. So we're going to have to see that. But notice how those buy-on field orders are gone now real time. Again, I told you that technology is real time, and the technology is now identifying that many of those orders either got filled or got canceled. And why is that? Well, maybe because we are in an up climate, which is confirmed. Okay, you would expect it to go higher, but that climate has been running for 6 candles, where statistics suggest that 5 candles is a normal thing to happen. So we have exceeded a little bit what normal is, and therefore I will not be surprised to see the dollar to come back down, hit that UFO at 167.5, and from there really produce a very beautiful up market to the upside. But it could happen from here definitely because the climate is up. But statistically speaking, this climate is now entering the less likely territory by having surpassed 5 and hitting now number 6 here on the statistical count. Okay, so keep that in mind. By the way, I didn't say that AutoClimate is a tool that you can get on our website for free, and you can see it's very powerful. So maybe you want to follow the link on the screen to find our website and also go there and get it for yourself. Speed of movement in the case of, let me get the right chart on the screen. Speed of movement in the case of the US dollar on a daily time frame, it would be expected to be at a rate of 0.6 points a day, 1.3 points a week, 2.7 points a month, either up or down. This is speed of movement extracted from options on currencies. And the last market that we're going to analyze is the bakkt Bitcoin, which is a fantastic Bitcoin contract that trades in the futures exchange, the ICE exchange, which is very adequate for traders that want to be a bit safer than in the hands of certain digital exchanges, thanks to a more robust regulation in this particular case. So we have here a down climate on the Bitcoin, which has been running for a while pretty aggressively to the upside. So we now have a down climate, but notice that just like the equity markets, this down climate is unconfirmed. Thin dot, it's unconfirmed. And unconfirmed, okay, that means that it may turn in the opposite direction very quickly because there is not a statistical edge going down, even though Bitcoin has been falling. But look at who is here. Right, beautiful UFO waiting, and we may see the prices of Bitcoin go back higher sooner than later. So we are talking about sell-on field orders located at 23,000 plus, buy-on field orders located at 20,977.5. This is what is identified by our technology, and we expect a speed of movement to be a bit more on the boring side compared to what we are used to. To what we are used to. With the Bitcoin, which is a speed of movement of 690 points a day. That's less than the last week and definitely the prior weeks. 1,500 points either up or down in a week, and 3,000 plus points in a month, which is, it used to be 4,000 or 5,000 points a month. Now it's been slowing down its speed. Okay. Cool. So before we conclude, I just wanted to highlight the fact that the way we run what we do, it's based on 3 pillars. We provide trading technologies which are patented, powerful stuff. But of course, if we have very powerful technology, but we don't support you on how to use it, thanks to training, in this case courses, we will not do good to you. So we have technology and courses, but also beyond the courses that give you knowledge on how to do things, we need to practice and repeat together so the knowledge becomes a skill. That's where the coaching comes into place. So you will find a series of tools and methods that we use in those 3 domains that may be maybe convenient to you depending on where you are in your learning journey as a trader. And please feel free to check. Please feel free to email us if you have questions. And definitely delighted to have you join our communities. Before we conclude, I have a couple more messages for you concerning the economic calendar. Let me zoom in. So we're talking about An interesting week in a way, especially with the GDP in Europe, with CPI in the US. That's gonna probably spice up the markets tomorrow. And then retail sales, which is in a way very related to CPI, may add a bit more spice on the Wednesday. So I would expect a little bit of volatility kicking in the markets on Tuesday and Wednesday, and the rest of the week is fairly quiet from a news and economic reports point of view, unless something crazy happens in the world, which could happen anytime. Really. Our book, well, we've been designated #1 new release in 3 categories in Amazon, so we are super happy about that. Our readers seem to be extremely happy about it. When you buy our book, which could be sold as low as $3.88 in ebook format or $18.88 in paperback format, well, not only you get the book, you also get access to a free course and 3 months of auto UFOs and auto climate. So I guess that if you're serious about trading and you like to read, you're gonna be on top of that all the way. With all of this said, we are done for today's review of the markets. This is our market commentary before the bell in 3D, week 7, 2023. As always, it's been my pleasure to be here for you guys. Again, my name is Jose Blasco. Looking forward to seeing you in a future session. Keep up the good work, enjoy the markets, do a good job, manage your risk, be safe, and see you around. Take care, everybody. Bye-bye.